Tucker sits down with Luke Gromen, a finance and macroeconomics expert known for his insights on gold, to uncover the massive shift of gold between nations as a precursor to a new global financial system. He dives into the secrecy surrounding gold ownership, questioning why Fort Knox can't be audited. Gromen also challenges the narratives pushed by the intel community against gold owners and raises eyebrows about Warren Buffett's role in the banking industry. This timely analysis reveals gold's critical status amid the evolving economic landscape. Since 2014, national central banks have grown their gold piggy banks by about $600 billion. On the other hand, they have not added to their net treasury reserve. In fact, those have declined by about $300 billion. This is a significant shift from the past 50 years or so. So what is going on? Tucker and Gromen give us a somewhat interesting history of gold before getting back to the key question. What is going on with central banks and gold? And more recently, why have we seen so much gold trading around the globe? As of this writing, gold sits near an all-time high as it closes in on $3,000 per ounce. Gromen explains that when countries physically move monetary gold, a lot of it can be done in secret. In an interesting exchange, Tucker and Gromen Google gold storage by country. They both agree that the list is absurdly incorrect. For example, France is listed as having more physical gold than China, which they agree is patently untrue. This got them to the topic of Fort Knox and the ensuing audit. How much gold does the US really have? Gromen makes the point that he believes that the US has avoided auditing Fort Knox in part because it focuses attention on gold. The US dollar was removed from the gold standard in 1971, and this action was effectively a default on certain loans backed by gold. So talking about gold was something that an entire generation of US leaders wanted to avoid. With all of the flows and price action related to gold recently, gold is undoubtedly back in the news. More to the point, there has been significant gold inflow to the United States, particularly from the UK. The belief in the market is that incoming tariffs from the Trump administration will impact the price of the gold in the short term, as traders position their gold holdings accordingly. However, that is only a short-term issue. Both Gromen and Tucker believe there is a separate tactical and strategic reason why this might be happening. Gromen believes that the US may revalue its gold, which is currently on the books at $42 to the current amount, around $2,900. This would be done in large part to pay back debt with gold and put the US in a better position to rebuild its industrial base. And in turn, this industrial base would be in a better position to support US defense, which is more and more dependent upon China for production, as we have learned from the Ukraine war. Generally, Gromen observes that with the US dollar as the world's reserve currency, and with national debt so high, the US has seen industries hollowed out, except for those close to money. He cites a fascinating discussion that J.D. Vance had with Jerome Powell on this topic in 2023. Gromen goes on to state that the US is now vulnerable because it can't fund a war with an enemy who is our industrial supplier. So Gromen believes that the US will put on tariffs, lower taxes, reinvest in factories, not just financial assets, and encourage foreign nations to invest in US stored gold. This would be effectively another way to pay down debt with gold. The last 30 minutes of this podcast went from interesting to mind-blowing. Gromen was succinct and specific as he explained how the macroeconomic changes in the US will change how we work, live, prosper, and interact on the international stage. In short, he sees the US moving from a primarily financial-based economy to a better diversified economy that can at least produce its own artillery shells. This rebalance of the US economy, he believes, will once again prosper the middle class and create new incentive structures that broaden opportunity beyond finance, government, and technology. At the close, they discuss what a retail investor might do with this information. Well, Gromen recommends holding 5 to 10% of net worth in gold bullion as a safeguard against inflation, particularly as Treasury bonds lose purchasing power, a pressing concern for boomers reliant on entitlements. Looking ahead, gold could climb 2 to 4 times its current value, potentially reaching $6,000 to $12,000 per ounce, to realign with historical norms where the US covered 40% of foreign-held US debt, now just 9%. Don't take this as financial advice, by the way. So we landed on a positive pod score for this podcast, but you've got to make it through the first 30 minutes or so, which is rather slow as they focused on the history of gold and so forth. Stick with it. The pod score, 3.5 of 5 mics.